Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending October 18th, 2019. Highlights of the week. First real steady week of harvest in a majority of the Midwest, led mainly by soybeans at this time, as many areas are concentrating on trying to get as many soybeans out as they can and eventually moving to corn. So as time wears on, we'll have a better idea on yields and progress, etc. So Monday's progress report will be interesting. For the week, fairly quiet. Last week the market ended with quite a bit of euphoria over the potential of some Chinese trade talk, positive tones, etc. But for the week, corn was down 8 cents, and it's also up about 2 cents for the month. Keep in mind, corn's still up about $20 going into the September 30th stocks report, which was bullish. Beans for the week, down 2 cents, but it's up almost 30 for the month of October so far, and up nearly 50 cents since going into that stocks report. Wheat seemed to be the shining star this week, up 26 cents for the week, up 35 cents for the month, and up about 40 since, again, that September stocks report. Livestock, for what it's worth, cattle, another strong week, continues his uptrend, which is up $14 in the last 6 weeks. About $1.20 for the week. Hogs, volatility there back and forth. Hogs basically down 20 cents this week, but also down about $5.50 so far for the month of October. Interesting comment we were looking at today too, or an interesting thought, is looking at the spot cash price here in Cedar Rapids in comparison to a year ago. And I think you could find this in most locations throughout the Midwest if you want to compare. But believe it or not, the cash corn bid, spot corn bid, is 50 cents higher today. 50 cents higher than a year ago. Now, 20 of that is from a higher futures price and roughly 30-cent higher basis levels. More on that in a second. One customer told me this is the best fall bid they've had this year since 2015, so going back 4 years. Beans are up 85 cents from a year ago at this time, 75 cents of that being on the futures, and 10-cent better basis than a year ago. A lot of conversation throughout the Midwest about strong corn basis, and that's been the case since midsummer. Just lack of movement, and part of that is just you have a late crop, harvest is being strung out. You're having to use a lot of that old crop supply to try to breach that gap until the new crop supply is really available. Randy Middlestead with R.G. O'Brien put out an interesting chart earlier this week, and if you take the September 1st stocks along with how much has been done through middle of October, this is the smallest available stocks we've had in about 5 or 6 years that same date. So we still feel basis is going to stay fairly firm historically through harvest. We may see some weakening as the corn starts to become more base sensitive, and is going to make this basis continue to be historically fairly strong. Seeing smaller versions of that on the soybeans. Basis levels are better than a year ago, and same subject line. Movement has been very limited thus far. That is, the producer is until there's that next time frame where cash is needed. So keep that in mind as we go along. But bottom line is, the cash price is a lot better today than a year ago, and if a person's available and has the ability to capture some of this strong basis and or better board, it probably doesn't hurt to move some of these bushels to town right now if that's an available option. Again, I mentioned a little earlier the euphoria to some degree on Chinese business. during this week. It's been a little more vague on when, where, how much. Chinese administration, they intend to increase ag purchases, U.S. farm ag purchases. Demand relevant or depending on demand, so that's going to be key, especially with the African swine fever, what kind of impact that's having on domestic demand. And it looks like China did book quite a bit of Brazil soybeans this week. Now we've seen the spreads widen somewhat this week on both corn and beans. Some of that's probably harvest related. The rest of it could be somewhat demand related. So the corn market over the last 4 or 5 years has had a tendency to firm up in September and October, and then to back off some in November, and then go very flat through the winter. We would not be surprised to see something similar to that this year. Keep in mind, demand is still lackluster. Export sales this morning were poor on corn. Year-to-date, corn sales are a little over 400 million bushels right now on the books. A year ago at this time, they were well over 800. So we are running at 50% of exports right now versus a year ago on this same date. So thus, if we have any type of uptick or potential movement, look at this time frame on corn to get some corn locked in. Beans a little different animal as far as seasonally, because you're entering the growing season in South America, but be flexible there. Keep in mind, these markets, I think, are a lot higher than what most people feel they are listening to news reports, analysts, etc. I think that's to shed some light. If you have any questions on any of these markets, feel free to give us a call. We'd be happy to discuss in more detail, looking at some strategies or some options. Give us a phone call. It's 800-373-2525 or BIScommodities.com. With that, everyone have a wonderful weekend.